Welcome to MFX Center's 2-Minute Trading School, where 2 minutes a week can change your trading life. Before progressing further, let's look at the disclaimer. In this video, we'll be talking about how to prepare for trading. The most frequently asked question I hear is why a trader needs preparation. Why a trader needs to spend around 5 to 10 minutes before taking a trade or executing a trade. And in this video, we'll be talking about why a trader needs the preparation and how a trader can prepare himself by just answering few questions from different stages. So before starting the video, I want to quote Alexander Graham Bell. Before anything else, preparation is the key to success. So if you're not prepared, you're not going into the way of success. So in this video, I'll be discussing about the 7 P's of trading day preparation by analyst, trainer, and master trader Rocky Hassan. That is me. Okay, so what are the 7 P's of my theory? That is number 1, planning. Number 2, picking. Number 3, persuading. Number 4, perception fixing. Number 5, perfect time execution. Number 6, prior trade management. And number 7, that is psychology check. So these are in a sequential manner. So you need to go in a sequence from planning to the psychology check. And you need to understand and you need to be very real with your answers before you get into a trade. So number 1 is planning. You need to be very prepared and you need to know what's your plan in the market. Like any kind of business plan, a trader needs a trading plan. Your trading plan must include what are the opportunities in the market today or in the upcoming week. If you are planning for a week, then you need to sit down on Sunday night and just answer these questions, like what are the opportunities in the market today or upcoming week, what are the economic events, most high impact events are going to occur throughout the week or the day, and what is the macro, technical, and sentimental view of the market currently. Okay, so if you can answer all these 3 things, then the planning phase is over. The next phase is picking. You need to pick at least 1, of course, but maximum 5 instruments where you'll be focusing for the week. The instrument can be Forex pairs, stocks, indices, commodities, anything you trade in the market. But you can pick on the basis of price action, annual reports, economic events, government plans or decisions, meetings, EPS, P ratio, etc. After you have shortlisted 5, now you need to shortlist a bit more. You need to shortlist to 3 instruments on the basis of your analysis, which will be fitting the best practice for the day of trader. If you are a day trader, you need to pick at least 3, at most 3, and at least 1 instrument to trade on. So after shortlisting the 3 instruments you are quite sure about, you need to persuade yourself. Persuading yourself before fixing your analytical energy to the instrument. You need to ask these questions. Number 1, are the instruments worth my time of analysis? Why I am picking this anyway? What ROI, that is return on investment, can I get from this? What is the best risk-reward ratio I can get from this trade if I execute this trade? And am I sure with this shortlisted instrument? So in this phase, you'll be questioning yourself. You'll be questioning the previous phase. If you're sure about what you have done in the previous phase, this phase will be as quick as just 5 seconds. Then you go to the next phase, that is perception fixing. Market is all about being on the right side, whether it's 6 or 9, whether it's buy or sell. You cannot be wrong. Sometimes market goes higher and suddenly it collapses and it crashes. It crashes below from where you have entered your buy trade. So make sure you're unbiased or married to one side of the market. Judge yourself and also judge your analysis, whether you are in the right trend, whether the market is highly volatile or not, whether you are understanding what the market price action is going to tell you, right? So understand the trend, understand the market flow and sentiment before getting into a decision to fix your perception about a market. After you have fixed your perception, now you need to have a perfect time execution. Successful trading depends on timing. If you're not sure when you should get into the trade or get out of the trade, you are losing the most critical part of your trading preparation. So understand which trading session is suitable for the instrument you are trading. For example, if you are trading Japanese yen, you should be trading on the Asian session of the market, right? So if you want to trade the Great British Pound, you should be trading on the London session, because on that moment or on that time the market will be very much active and there will be higher chance that after you take the trade the market will give you instant profit if you are right. So another thing you need to understand is that is there any kind of economic or annual report supporting the market momentum at that current time. So as I've said earlier, if you are trading Great British Pound and you are taking a buy or you are taking a sell, at that moment there was a news or high impact economic event on GBP, your trade will be affected by that. So you need to understand, and you need to understand and know when the market is going to move. So knowing your timing of your trade is very, very important. And last but not the least in this phase is what price levels are currently market in. Is there any kind of psychological level? Is there any kind of price that is mostly acted as support or resistance or any kind of event level? So if you're sure about all these things, then we'll be going to the next phase, that is prior trade management. You might be asking, trade management is done after I execute a trade, right? But before even executing the trade, you need to do a simple question answer session. That is, as like mind mapping, you need to have a prior trade management map. And your trade management map includes a few more questions, like what should be the size of the trade? What is the risk reward ratio in this trade? What will I do when trade goes against me? What I will do when trade goes according to my plan? Where should I put my limit orders or stop loss or take profit levels? And when I should move my stop loss to the break even. So these are the things of trade management which we'll be planning ahead of time in a notepad or in your mobile or anywhere else you want. But you should be answering these things, because if the risk reward ratio is not favorable, if the trade size is very small or very large, it will impact on your trading journey. So it will impact your trading capital as well. So you need to make sure that you answer all these questions pretty well and with your real answers. Then the last but not the least is psychology check. You need to ask yourself, how do I feel about this trade? And what is my intuition telling me about it? Sometimes big traders like Warren Buffett and George Soros rely on intuition. You might be thinking that is like kind of like going into a gambling side of the thing, but no. If you are well literate about trading and if you know that I'm not feeling something is right with this trade, and you still take that trade, about 90% of the time I found myself guilty because I didn't hear or listen to my intuition, or I didn't give any kind of importance to my intuition. My intuition was telling me that you should not go for this trade, but I somehow get into it. So if you are a literate trader, if you have the trading literacy in your subconscious mind, your intuition will be the best indicator for you at the last moment before executing the trade. For that, you can do one thing. Count to 5. 1, 2, 5 with 2-second break like this. 1, 2, 3 up to 5, and then click on the open trade button. Don't overthink. If you have answered all the previous phases questions properly, then you don't need to overthink and put any kind of other analysis element inside the process. Just you need to understand 3 more questions, that is how I'll react if the trade goes against me. Will I be taking revenge trade? Will I be being mad on my trading decision? And what I will react if trade goes according to my plan. Will I pyramid it? Will I increase my lot size and take another trade? You need to answer these 2 as well. And the last question, but not the least, what is my next plan after the trade is executed? If the trade is executed, you have nothing to do. Yeah, you can do some kind of trade management, but if you're well prepared, if you have done prior trade management, you're done for the day. You need to think what you'll do next. What are the next important investments you can do? So at the end of this video, this is kind of the end of the video. So at the end of the video, you might be thinking there are lots of questions to be asked. But if you do it for 1 or 2 days, you'll be finding it very easy, and it will only take 5 to 10 minutes at max before you get into a trade. And believe me, those 5 to 10 minutes, 10 minutes is a bit more, I think 5 minutes is enough. So with that 5 minutes, you'll be having greater profitability rather than going into the trade instantly or without any kind of preparation. So this is the end of the preparation phase before you even click on the mouse button and click on buy or sell. So if you want to get into more execution phase and post-trading phase videos, just subscribe to our channel in MFX Center in YouTube, because we post new videos every week for betterment of your trading career. So feel free to like our video and subscribe, and I'll be there every week telling you something more which will be helping you to become a better trader every day, every week, and every month of your trading career.